And in other news, many Wells Fargo's customers are upset as the company shuts down one of its most popular credit products. The bank notified customers who use the personal credit or personal lines of credit no money will be available to them. Now, people who use that credit offering could borrow up to $100,000 for things like home repairs or consolidation of credit card debt. Well, in the notice to customers about that closure, Wells Fargo warned that it could actually impact their credit scores.
And with all that, what's next for Wells Fargo customers? Well, here to provide more insight is economist Daniel Goodman. Now, Goodman, better yet, Daniel or Mr. Goodman, personal lines of credit typically range from a few thousands of dollars to $100,000, depending on your credit score. Wells Fargo customers received just 60 days. They notice about their accounts and what was happening. What options do they currently have?
Thank you. So, well, first of all, if they don't have any debt on those personal lines of credit, then I guess they'll just be shut down. What I'm wondering is if there is debt, does Wells Fargo eat that debt, or do they still have to pay it back? And that's what I like. Now, I actually have a personal line of credit with Wells Fargo, and it was very useful. It's a great tool, and it worries me that this bank is shutting down this product. It's a great product. They collect 4% interest rates. A lot of consumers use this personal line of credit. Now, you can use it for, home repair and things like that, but it's cash. You can use it for whatever you want. So, a lot of people during the pandemic, if you're unemployed, you're going to borrow off that personal line of credit. If you have a credit card that's charging 25% a year in interest, you can use that line of credit, pay that credit card down to zero, and only pay, whatever the interest rate may be for your personal line of credit, usually 3%, 4%, 5%, like you said, depending on the credit score. But it's a little worrisome that they're closing this down. My only concern would be is how many people are defaulting on these payments.
And that could be one of the reasons why they're stopping this. But you know what? Either way, Senator Elizabeth Warren slammed the decision on Twitter, saying not a single Wells Fargo customer should see their credit score suffer just because their bank is restricting after years of scam and incompetence. And I think she's also referring to past situations like the unfair lending practices, which created a whole class action lawsuit. So at this point, with this situation, can anything be done to ensure that the credit scores of people that were banking with them are not impacted?
Yeah, I don't think their credit scores are going to be impacted so much. It's closing down. It's pretty much like the same thing as closing down a credit card, which you don't want to typically do so often.
Because it impacts
I think their credit scores are going to be fine. What I think is the worrisome part again is that why are they shutting this down? What's going on? It starts bringing back memories of the movie The Big Short, which things are starting to, is this the beginning? Because they also shut down some of their auto loans too, with some of their dealerships. So what's going on here? Why are they shutting this down? Why would you shut a good product down? Why? I think people are not paying their lines of credit back.
Well, I mean, you talk about why are they doing this? I mean, my question for you is, are we looking at one of the country, first of all, they're one of the largest banks in the country. I believe they're number 4. Yeah. Are we looking at the demise of one of the nation's top lenders?
That's a big word. That's a scary word, demise. Wells Fargo is a very, so use the word tight. They don't just loan out money to anybody. I mean, they are a tight bank. They did survive very well in the financial crisis. So demise, no. But look, when you dish out trillions of dollars in stimulus checks and packages and things like that, and the Fed's just printing money, there's repercussions. I mean, it might not happen in a month or two, but 1 to 2 years from now. So this could be, like I said, demise is a scary word. Let's hope not. But
well,
this
what about
be the
fall
start
from
of something.
grace? I mean, fall from grace may better sum up the position that they're currently in, especially coming off of the 2018 fake account scandal that they were involved in, where they had to pay $3 billion.
That's right. That's right. So, this could be, cutting loose ends and starting to tighten up and, shutting accounts where people just aren't paying them back. Remember, this is cash, so people can use this for whatever they want. It's not like it's has to be used for just home repair or maybe just an auto loan or something like that. This is cash, so they can use it for whatever they want. And when if you are unemployed and you're collecting a small unemployment check and you have this personal line of credit, you're going to take it. You're going to use it. You got to put food on the table. And that's something that absolutely could have happened. I can't guarantee that that's what's happening, but why are they shutting this down? It's a good product.
Yeah, well,
I have it myself. Yeah.
Right, and I've used it in the past for my house. This is the bank that we're talking about that has, more than $19 billion in revenue that they're dealing with annually. And surprisingly,
Right.
the New York Stock Exchange says that they're up this morning. I thought that it would impact their, stock exchange numbers a lot more. How do you think this announcement will affect their numbers for those that are investing in it?
Well, I think when a bank or even a company closes accounts like that, they're taking on less risk in a sense, and investors like that. I think that if the news was that nobody is paying them and that they're stuck with a huge debt, then that would affect the stock in a downward trend. But I think that since they're saying they're closing that could be minimizing the risk for that product. Consumers aren't happy, but investors who own, shareholders, that's not too scary. But like I said, let's hope this is not the beginning of something even worse.
Yeah, I think folks like you and other customers are actually hoping and praying the same exact thing. Daniel Goodman, I know we're going to continue this conversation, so stick around, don't go anywhere, grab a cup of water, and we'll see you on the flip side after the commercial break.
Welcome back to BNC Live. I'm Shannon Lanier.
And I'm Tishani Whitlow. In case you're just joining us, we've been discussing how Wells Fargo is shutting down all existing personal lines of credit to its customers.
And that gained attention from Senator Elizabeth Warren, who slammed the decision on Twitter and called the bank incompetent. Senator Warren was also a key figure when Wells Fargo admitted to opening millions of fake accounts and in 2017 publicly told the bank's CEO he should be fired. A Wells Fargo spokesperson says that the customers who previously used the personal lines of credit should now use credit cards and personal loans instead. Not something I would want to do.
Yeah. Well, now here joining us to continue the conversation is a professional. He's a trader. He's a business trader per business. Better yet, let me back that up. Financial analyst as well, Daniel Goodman. Thank you for staying with us, sir. Thank you for joining us and staying with us on BNC. We know you're a day trader. So let's get right into the numbers in the heart of this. Banks make their money by loaning money, right? Last year, Wells Fargo stopped home equity lines of credit and also some auto loans. Was this a repercussion of that $3 billion, we talked about this earlier, that they had to pay out after the fake account scandal that they encountered?
No, I don't think so. Well, I can't say for sure, obviously, but no, this is pandemic. This is look, the bank's crashing 50% last year, March to April, February, March, and April. This is tightening up. This is, like I mentioned before, cutting loose ends. It's when you're having people not paying mortgages and you don't have to pay rent, and I think it's all connected. With moratorium where you don't have to pay a rent and you can't get evicted, you can defer your mortgage payments. This is huge, and this is huge. So one thing is for sure is that look, if you're not paying mortgages, you can also not pay back your personal line of credit. Now that wasn't an option, but there's people defaulting on this 100%. I mean, it is what it is when you have the unemployment rate go from 3.9% before the crash or the pandemic, skyrocketing to 15%, there's going to be repercussions. And it doesn't always happen within 6 months, 3 months, a year. It could take 2-3 years. And especially with all this stimulus money being poured, into the American public and people that are unemployed, how are you going to pay this money back? The Fed is printing money in an insane way. I hope they have a plan.
Yeah, that plan is definitely needed, especially because a lot of people are trying to get the economy started back again as we recover from this pandemic. But a lot of people also know that interest rates are low, so it was a good time to get these personal lines of credit. However, can you explain for those out there that may not understand the difference between a personal line of credit and a credit card? Because the rates on a credit card seem to be a lot higher than they are on lines of credit right now.
Absolutely. So I can tell you from getting a personal line of credit myself from Wells Fargo, it wasn't easy. They are a tight bank. They just don't dish it out. They don't. I mean, they do a lot of background checks. They're very secure. However, the difference, yes, is one big is like the interest rate. So when you first get a personal line of credit, they could give you a nice offer too for joining with them. For the first year could be interest free. And then after that, whatever the fluctuating standard interest rate may be. I was paying about 4% interest. And it also depends on your credit score. You have a 650 credit score or you have an 800 credit score, that's going to help you with your interest rate. The difference between that and a credit card is the personal line of credit is cash. I'm going to repeat that. It's cash. You can pull it out and pull it out of an ATM machine if you like. Now, essentially, you take it from your personal line of credit, transfer it to your checking account, and there's your cash. You can pay your rent with it. Groceries, of course, groceries you can pay with your credit card as well. And then, yes, credit cards are charging anywhere from 18 to 25%, depending on your credit score as well. So like I mentioned before, you could borrow, you could take cash from your personal line of credit and pay down the credit card that you are paying 25% interest rate on, or 22, whatever. And then now you're only paying 4% or 5 or 6 even on that personal line of credit.
So I want to get one last question in.
Yes.
Because we're working with seconds now. What's going to be the social impact of this decision?
We're going to have a lot of upset people. The social impact, well, there's going to be less spending. Simple as that. There's going to be when you're cutting off a line of credit like this, there's going to be less spending.
So what does that mean for the economy as we recover?
Well, we're looking at inflation. Inflation has been getting scary the last 6 months. And so less spending might not be the worst thing, but we don't want to shut it off by cutting down or cutting off completely credit lines.
Daniel Goodman, day trader, financial analyst. Thank you for joining us on BNC Live, sir. We appreciate your insight.
Thank you.